Good afternoon and welcome to this webinar on the federal government budget for the upcoming 22-23 financial year. My name is Peter Lacandro, the Managing Partner of Financially Sorted. I hope that you're all safe and well and getting back to some normality. We as a team at Financially Sorted thought that it would be a great idea to talk and communicate to all our clients about the latest government announcements and what it may mean for you, both personally, business, superannuation, along with any investment decisions also. As a team, we're obviously here to assist with however we can. We'll continue to communicate with you, whether it be via email, telephone calls, newsletters, obviously social media and webinars like these ones. The team's here to help, and please just ask and we'll certainly do our best to assist. All right, let's get stuck into it. So firstly, a little bit about Financially Sorted. Yes, we're back working in the respective offices, both at Moonee Ponds and Wheelers Hill, and we're certainly here to assist. We, like many other businesses, have created and are using technology to the best of our ability. And it's interesting, which I'll cover in a moment, that the government for small businesses out there that are using technology. And whether it be technology, new legislation, obviously we're coming up with an election, so that's going to be important as well. Before we get stuck into all the content, like I must always do, please, this is general advice only. It's not been designed for you or your particular situation and taking into account your particular circumstances. Please, we're here to help if we can, or you need to seek the appropriate expert advice to do so. In 60 minutes, which we've allocated for this webinar, we certainly can't cover everything, but please bear in mind, we're here to assist and happy to talk to you about your particular circumstances. Okay, so let's get stuck into it all. So it's fantastic to have you all along. A lot of people have registered for this webinar, and I'll certainly do my best to cover all your questions and give you a bit of a brief of what the budget was handed down the other evening. Some of the discussion points that we will cover, we'll look at some superannuation changes. We'll look at some tax adjustments or tax cuts, both personally and for those of you operating businesses. We'll look at some social security measures. There's plenty of other measures also that were hidden in this budget. And we'll also have a look at what to do next. Please, if any of you have any questions or comments in your Q&A or the chat box on your Zoom connection, feel free to pop it in there, and providing I've got time at the end, I'll certainly do my best to answer those questions for you. A recording of this webinar is happening, along with the PDF slides that you'll see, and we'll certainly post them onto our website. Give us about 24 to 48 hours to do so, and I'll show you towards the end of this presentation how you can access all that. I do highlight down below here, these are budget announcements, are still only proposed at this stage and are yet to be legislated. So what I'm about to share with you is not law at this point, although the Labor Party have come out saying they'll back a lot of it. Obviously, we do have an election coming up, so they'd be frowned upon if they didn't. However, it is not law at this point. We'll certainly keep you updated as things are legislated through our newsletters, through our various conversations that we have of this budget. So Josh Frydenberg, it was his fourth budget. He highlighted a strong economy means a stronger budget. To be honest with you, it was really boring and not too much into it, especially considering we're looking at an election tipped to be either the 14th or 21st of May, in a couple of months. There were 4 pillars that basically this budget covered. The first one, which has been the topical one in the media, was the cost of living relief. Jobs creation was the second part of it. Essential services investment was the third part of it. And certainly with what's happening in Russia and Ukraine at the moment, higher defence and national security spend was the other part of it. Some key measures that were announced was a once-off $420 cost of living tax offset for those of you that are either low or middle-income earners, which will cover, along with a $250 payment for pensioners and welfare recipients. The big one is the petrol, so the fuel excise tax will also be reduced by 50% for 6 months, starting from Tuesday evening or Tuesday midnight, budget night. For retirees, there's also going to be a 50% reduction in the minimum annual pension payments that you are able to pull out from your superannuation. So that's been extended. And for those of you in small business, there was also some skills and training boost, which will provide a bonus tax deduction of 20%. On eligible courses, must be external, and businesses also will receive a 20% bonus tax deduction for expenditure on digital technologies, and that will include things like cloud computing, e-invoicing, cyber security, web design, and that's limited to $100,000 per annum. Notwithstanding COVID-19, recent floods obviously up our east coast of Australia, the Russian invasion of Ukraine, the budget experts expect the economy to remain strong despite all these ongoing challenges, with output and jobs already getting back to pre-pandemic levels. And the government did emphasise that we are, as a country, well advanced compared to other advanced economies throughout the world. So let's have a look at it all in a little bit more detail. So firstly, some numbers around the budget. Since the December last year outlook, the good news is the underlying cash balance has improved by over $100 billion over the next 5 years. So it was a little bit scary this time last year, and certainly over the last 2 years with the pandemic and the deficits that we were looking at. We can thank iron ore prices, we can thank low unemployment, is a couple of things which results in extra tax revenue, and certainly the cash balance is a hell of a lot better than what was previously predicted. The other evening, the budget deficit, nearly $80 billion is what's expected to happen. For the coming year, another $78 billion deficit. So we're certainly racking up some debt, although that's almost halved from what we expected 12 months ago. The net debt, so as a country, at the 22-23 financial year, is expected to be over $1,714 billion, and it's forecast to rise to $864 billion in a couple of years. So certainly no short-term, there'll be a lot of short-term pain, and then hopefully our governments, whoever is elected, can start working out ways to reduce those deficits. All right, let's start with some superannuation. So what happens? So for those of you who work in super, who have their own self-managed super funds, the budget the other evening, well, it was pretty boring, to be honest. this is a great thing compared to what's happened previous years, as the changes over the years that went into superannuation have been big, and there certainly have been plenty of them. A lot of people and a lot of clients that we talk to get frustrated with the changes in super over the years because the goalposts kept shifting. So boring is good for a change. So we need to take advantage of that. So what's happened with superannuation? Basically, those of you that are retired or at pension status, the minimum pension drawdown relief has been extended for the upcoming financial year. It was due to cease as at 30th of June this year. So originally this relief was brought in 2021 in response to the COVID-19 crisis, because basically the federal government said your investments may be earning less, and as a result will halve the pension withdrawal that you needed to undertake. So like I said, it's been extended. So looking at the numbers, for those of you that are retired and under the age of 65, like I said, the last couple of years, it was 2% was the amount that you were able to withdraw, down from or halved from the 4%, which is the legislated amount. For next year, it was due to go back up, but now we have this proposal column where it's due to remain at 2% for another 12 months or into the following financial year. And as we get older and the respective pension withdrawal minimum amounts increase, you can see that the government are proposing to keep them at half for next year. So it doesn't mean that you have to only take half. You can certainly take more if you desire and if your cash flow allows inside your super, but it certainly gives some options to many of you out there. And apart from that, that was really the only other change in superannuation. Like I said, it is certainly quite boring. What I thought I would do though is just quickly highlight for you what is already legislated to happen in the coming years with the super guarantee rises. So there was some expectation that the government may, but they didn't touch it. So sitting here today, basically we're in the 21-22 financial year, and for those of you that are either running small businesses or are employed, which covers most of us, your boss should be paying 10% superannuation on your behalf. At a minimum, that should be being done on a quarterly basis. However, a lot of people do it more frequently. As of July this year, so for the upcoming financial year, that's due to rise to 10.5% of your ordinary times earnings. And you can see it's already legislated to rise thereafter up to 12% in 2025. So for those of you that are running small businesses, it's important to realise that your wage costs will go up. Simply, even if you don't give a pay rise, just simply on superannuation, that'll affect slightly your work cover premiums as well will rise, and could affect for those of you that are applicable with payroll tax also. So just thought it'd be good to highlight those upcoming changes. Apart from that, that's pretty much it with super. Like I said, pretty dull and boring. We'll take that this year, that's for sure. Okay, so the big one which hit the media was the fuel excise tax. So obviously making petrol at the bowsers a lot cheaper. So the government, they've been forced into a position, bit of a no-win position. You know, the cost of living pressures needed to be released somewhat, but if they went too far, they would have been criticised for wasting money, and it could also cause some pressure on inflation and interest rate rises sooner rather than later. So what did the government decide to do? They decided to reduce the burden of higher fuel prices by halving the excise on fuel. So currently at the moment, the excise tax is 44.2 cents per litre whenever we fill up, and that covers both petrol and diesel. The government for the next 6 months only is 50% discount or halving that. It's expected to cost them some $3 billion. They have highlighted though that they will continue to fund roads and do what they need to in that regard. According to Mr. Frydenberg, it should take 2 weeks to come through the petrol bowsers, although I have noticed there's a few petrol stations still above $2 and some of them are getting a little bit lower. My bigger, maybe my question or my thoughts are though, will this be passed on fully? And you know, we've got the consumer watchdog to patrol this, and the government certainly highlighted that in the budget speech the other night. But you know, we filling up, how do we know if they've passed on 17 cents or 22 cents? We probably won't. So it's going to be interesting to see how much petrol decreases. But then at the same time, it's going to be interesting in 6 months that if things haven't changed, and petrol will all of a sudden increase again. You know, by that time though, we've had a federal election, and depending upon who wins and who has the balance of power, I'm sure they'll make decisions at that point whether to continue or whether to reverse such a decision. But the intention is that it'll certainly give some relief at the petrol bowsers for us all. So that's a positive thing. In relation to our personal taxes, obviously the government was looking at relieving some things as well. So they've introduced what's called a cost of living tax offset. It will be applicable when you lodge your 2022 income tax return. So you're not going to get it before June 30, obviously. And basically at the moment, there's what's called a cost of living offset available for small and medium taxpayers. And the government, that's currently sits at $1,080. And the government will be adding an extra $420 to that to call it $1,500. And I'll go through the different thresholds in a moment. So basically this will be applicable up until anyone earning up to $126,000 per annum. So like I said, the current $1,080, it was actually due to cease on the 30th of June this year. Sorry, not the 31st. So a bit of a typo there. However, they've extended it into the new financial year and have added an extra $420 to it to help us when it comes tax time. A bit like a mini tax cut, just as a once off. So how's it going to work? So currently, any of you out there that are preparing tax returns and have a taxable income of less than $37,000, you're entitled to a rebate of $255. That will be increased by the $420, so that's proposed to come in at $675. For those of you where your taxable income lies between 37 to 48, you can see that it shades up a little bit, and respectively, that'll happen here as well. Anyone that currently earns between $48,000 to $90,000, you were entitled to this rebate of $1,080. That'll be increased to $1,500, and it'll also basically cover those up until $126,000. So when we basically complete your tax returns for the upcoming 2022 year, obviously through our technology that we use, and our team will calculate where you sit amongst all that, and that will determine the rebate that you're entitled to. So something to look forward to, and certainly, you know, if applicable, we'll certainly do our utmost to get that rebate back for you. So that's going to help in the coming months as well. Just wanted to quickly touch on some tax cuts. So previously, again, stage 3 tax cuts were legislated a couple of years back. So these are the legislated rates. And again, I just wanted to highlight that there were no changes to these tax cuts that were legislated a year and 2 back. So in simple terms, for this upcoming or the current financial year and upcoming couple of financials year, you can see the tax brackets applicable. The good news is when we hit 2025, they're basically streamlining or getting rid of some of the tax brackets. So for any of you that earn up to 45,000 in taxable income, nothing will change in accordance with the tax rates, but then the big changes kick in after that. So come 2025, anyone earning between 45,000 up to 200, you will pay a flat rate of 30 cents in the dollar. Okay, a hell of a lot better than 32, 37, and the 45 that we're currently sitting in. And then anyone over 200, congratulations, you're classed as rich, and you will get hit with the highest tax percentage, being 45 cents in the dollar. So that'll provide some relief in the upcoming years. And like I said, these are locked in regardless of who wins the next election, with Labor Party officially vowing to support these tax cuts and not reversing them, or if they were to win the next election. So that's some positive stuff. You'll have to wait a couple of years though for that to come through. I do highlight that these various tax rates, they do not include Medicare levy or Medicare levy surcharge for those of you that get hit with that because you don't have private health insurance. So just wanted to quickly mention that as well. On the topic of Medicare levy thresholds, so out of the budget the other evening, and whether you're single or family or seniors and pensioners, every year there tends to be a slight increase in our thresholds. So currently, for all of you that we've either done or currently completing your 21 work, for a single person it's about 23, and you can see it's gone up slightly. So neither here, neither there, and usually there is a small increase in that every year. So for those of you under those respective levels, you are not subject to Medicare levy, but then we all get hit at 1.5% of our taxable income. So that's just something to quickly bring to your attention as well. Okay, so the next one, still on the personal tax bracket or area, and this was highlighted in our newsletter that was sent out at the beginning of March, so a couple of weeks ago. The budget confirmed that the cost of taking COVID-19 tests to attend your work will be tax deductible for those individuals. So if, for example, you have a scratchy throat and you're doing the right thing, and before you leave home you have a rat test, you're okay, and you're buying these tests from the local chemist or from the local supermarket, etc., please make sure you keep your records, because they will be tax deductible. For those of businesses out there, so that are buying them and maybe keeping them at work just in case a situation arises, the government has also confirmed that there will be no FBT on those tests that are provided to employees for these purposes. So just another little bit of record keeping for you to hold on to, but certainly, you know, especially when there was a scarcity of them earlier on this year or last year, it's well worth keeping the documents for those as tax deductible. Still on the personal tax area, the government have introduced or added various organisations to what we call the deductible gift recipients, or for those that are applicable if you make donations to. So we all, you know, some of us make donations to things like Royal Children's Hospital or Salvation Army, etc. These are new institutions that we can do that with. So I won't go through them all, but yeah, there's some new bodies that have been added. Along with some others here over the page. Like I said, you will have access to the slides so you can drill down on those a little bit further. And that's it around the personal side of things. So the main two things there are the low income or low and middle age offset that the government have introduced around that, and proposed tax rates in the future. Let's turn our attention now to businesses. So there's two main things here: the training and upskill for employees deduction, along with the technology deduction. So firstly, these are available to a small business only. What a gated turnover of less than $50 million. And in simple terms, with this new one, you're basically the training and upskill of employees. So you'll be able to deduct an additional 20% of expenditure on external training courses provided to your employees. They'll need these external training courses. Yes, they will have to be applicable to employees in Australia or online, and they need to be delivered by entities registered in Australia. So that probably limits you going to Vegas to do an online, to do a course over there, okay? Some exclusions will apply, however, and this may include in-house or on-job training for different reasons in that regard. The fine print has not been provided yet from the budget, so we need to wait for the legislation to be approved to be able to give you a little bit more information. The boost for this expenditure incurred by June this year will be claimed in tax returns in the following income year. So if you incur this between now or budget night and 30th of June, you will not claim it on this coming tax return. It'll be on next year's tax return or the 2023 return. Any expenditure therefore incurred next year through to June 24 will be included in the income year of which the expenditure is incurred. And this applies from budget night at 7:30 through to the 30th of June 2024. So basically speaking, if you spend $1 on training or seminars that are all applicable, you will get a tax deduction of $1.20. So they're giving you a little bit of a bonus. Any expenditure incurred now or but up until June 30 will not be claimed on this year's tax return. It will be on the 2023 return. And then for the next 2 years, it'll be claimed when incurred. So that's a little bit of a snapshot. We need to wait for a bit more information just to see what's definitely included, what's not. But the idea is it will benefit small businesses. They're trying to encourage, obviously, training of your team, employees, and upskilling where possible. The second similar thing for small businesses out there was digital adoption tax benefits. So the government is introducing this technology investment boost to support digital adoption by small businesses. And that'll basically kick in from budget night through to the 30th of June 2023. So obviously many small businesses, ours no different, have introduced a lot of technology, have a lot of businesses have used technology to even stay afloat. And now the government is turning around and providing an extra benefit where you can, if you spend $1, you will get an additional 20% tax deduction. So again, spend $1, get a tax deduction of $1.20. So that'll be a good thing. I wish they backdated it a couple of years, because I'm sure, like many of you out there, there'd be a lot of businesses that have spent a lot of money just to stay afloat with their businesses. There is an annual cap on this one of $100,000 per year. That'll cover business expenses and depreciating assets that support digital adoption, such as portable payment devices, cyber security systems, and even subscriptions to various cloud-based services. Like I said, let's wait for the fine details to see what all that means. You know, for example, does it include a laptop? Does it include all these subscriptions that we're all paying to different cloud-based software providers? Let's wait and see. The final thing to do with businesses is around pay-as-you-go installments. So they're basically playing with that a little bit. So a lot of clients ring us and they simply don't understand, or it's quite confusing, the different pay-as-you-go rules out there. So basically the budget papers confirmed, this was an earlier announced by the Treasurer, but basically companies will be allowed to choose to have their pay-as-you-go installments based on their current financial performance, not the previous financial year. So generally what happens is we prepare your tax return. The government presumes that those numbers are going to happen again. They also build an uplift factor in those numbers, and they hit you with pay-as-you-go. This at the moment is for companies only, not individuals. So the government is basically saying that moving forward, that you can extract your current performance from business accounting software, for example, Xero, and you'll be able to use those new numbers to determine your pay-as-you-go. Big problem with this one is I'm not sure if they told the software companies like Xero or MyOb, etc., that this was going to happen. So the commencement date is subject to advice from the software providers about their actual capacity to deliver such changes. So it's anticipated that this won't kick in for a couple of years, not until Christmas next year, 2023, with this measure to then commence on the 2024. And that's presuming the software providers can adjust the software to help you, to help us as your accountant or bookkeeper to try and work all the numbers out. So it's going to be, let's wait and see, but it is a positive thing, because especially over the last 2 years, many businesses have suffered in cash flow or profitability. So it makes sense that your taxes are based upon your current performance rather than previous financial performance. So that's a positive move. It's just going to take a few years to get here. That's it for small businesses and businesses as such. Quickly on social security side of things. So there is again, hit the media quite profoundly, a one-off $250 cost of living payment. So pensioners and low-income families that rely on income support will receive this one-off cash bonus. It will happen in April 2022 as a coincidence just before the election. So that should, though, help ease some of the cost of living pressures. The good news is that these payments will be exempt from tax and will not count as income for support purposes when they determine whether you're eligible or not. A person can only receive one of these payments, even if you are eligible under two different Centrelink bonuses that you receive, which I'll show you in a moment. So it's important, and it'll only be available to Australian residents as well. So who are some of the eligible recipients? Obviously those on age pension, disability pension, and you can see the list continues: job seeker, youth allowance, So have a look at that. If you're applicable, you should be eligible for the 250 bonus. Stay tuned for exactly in April when they're planning to pay that, and it should go straight into your bank account accordingly. The other big area which was hidden in the budget papers was tax compliance and integrity. So be very, very careful. I've touched on this previously in different webinars. The ATO and the government are on the warpath. Obviously, the government has spent a lot of money over the last few years. Many would argue that they've wasted some as well. However, they need to basically make sure that people are not taking advantage of different things. So the government have provided an extra $325 million in the 24 financial year, and a further $327 million the following year to extend what they call tax avoidance task force by another 2 years through to June 2025. This task force was established in 2016 to undertake compliance activities, whether it be individuals, companies, high wealth individuals, trusts, etc. It also scrutinises tax advisors like ourselves and make sure that they're looking at those trying to promote tax avoidance schemes. So they're expecting by spending this money that it's going to raise $2.1 billion. So certainly when you look at the expenditure versus what they're expecting to bring in, the government say, why not? So they're going hard in that regard. Also, what they've done, single touch payroll. So many of us, whether we're employers or those of you on pay-as-you-go wages, the old days of getting a group certificate are now gone and dusted. And now what we have is a thing called single touch payroll, where every time you get paid, that data is lodged through software like Xero straight to the ATO. So it's Big Brother watching you all the time. What they've also done is they're committed to developing IT software and infrastructure to watch that, to monitor it closely, and also allow state and territory governments to talk amongst themselves, like with WorkCover, or perhaps the State Revenue Office, things like Centrelink with childcare benefits. So they're basically looking at having a closer look at what's going on to ensure that you and I are doing the right thing. So be very careful in that regard. The government are using technology to the best of their ability as well. So what should we all do? Be very, very aware, be careful. So that, like I said, the government and the ATO are looking closely, and they've spent a lot of money over the years, and they'll continue to investigate and prosecute. They did have a little bit of a sleep during COVID. They gave people the benefit of the doubt, but now they're starting to look and ask questions a lot closer. What can you do? Make sure your tax returns are up to date, your BASs, and your various state and government different things that need to be done, whether it be work covers, land taxes, things like that. They're starting to ask questions and conduct reviews and audits. Just like you and I use the technology to do our jobs, they are now using technology for data matching things and asking questions in that area. So be very, very careful. They are watching. You've got nothing to worry about if you're up to date and you're doing the right thing. Talk to us if you have any questions in that regard. Another pillar of the budget the other evening was around national security. Obviously, with what's going on around the world, whether it be Russia and Ukraine or in the Asian area as well. So the government are looking at spending a lot of money with our national security. So they're looking at almost $10 billion over 10 years to enhance cyber capabilities, an additional 136 million on our border force, and looking at increasing also criminal intelligence capacity to get rid of that stuff. So they're looking at introducing things and also enhancing our protection as well. Some other measures which I'll quickly touch on: health. So they are targeting a bit of money into mental health and suicide prevention. They're looking at the health of women and girls, mainly around endonomics, I think it is. Sorry, my English is not the best, but looking at basically concentrating on women's health in that regard. Families, they've played with the paid parental leave scheme, where they're basically giving families options of how to take 20 weeks worth of leave to suit their specific circumstances. So that's a slight change in that regard as well. Infrastructure. So the government is committed to, as you can see, almost $18 billion to road, rail and community infrastructure projects. So they're looking at spending quite a bit of money in that regard to build the infrastructure around the place. Some of what they're doing, I won't go through each state, but I've listed it here, which, you know, depending upon where you live, you can have a look at to see what they're proposing. Most of you are in Victoria, so if we flip across to Victoria, they're basically looking at spending a lot of money in the west, 3.6 billion to around Beveridge and around the outer metropolitan ring road, to hook all that up and hopefully get rid of some of the traffic that we find ourselves sitting in. They're also looking at Mickleham Road upgrade, so not too far away from the Moonee Ponds office. Ballarat out that way, along with a Canterbury Road upgrade as well. One thing that I didn't write here is the government has also allocated or parked, and when I say the government, the federal government, $4 million for the East-West link, which was ripped up a few years back now by Mr. Andrews. There is still $4 billion parked there if they want to undertake that again. At this stage, there's no sign that the Vic government will do that. However, we do have an election coming up, so anything is possible. So that's around the infrastructure side of things. Disaster, obviously, we've had a lot of floods up the East Coast over the last few months, and it looks like the government have allocated $6 billion is what they've allocated to assist those in need. The sad part is it looks like there's a bit more rain starting to happen up there again. So I'm not sure if this $6 billion will be enough or whether they'll have to pour some more money into it as well. Regional Australia, they've allocated some money there. Again, not sure if it's targeted into certain areas to maybe get some votes, but that's me being a little bit skeptical. However, there's different things that they're targeting around key regions to support regional Victoria. They want to grow some of the economies accordingly. All right. Apart from that, that's a bit of an update on the webinar on the federal budget and what's happened. Like I said, it was quite dull and boring, especially for an election budget. They had to be very, very careful, because if they were seen to spend too much money, it would be called wastage. And at the same time, we do have cost of living pressures, which drives up inflation. So if they spent and poured too much money into the economy, that would just cause things to rise again, especially interest rates, which are going to hurt a lot of families and homeowners out there. Just quickly wanted to mention insurances and financial planning. With COVID, you should be looking at your superannuation. How is it performing? Do you have enough insurances in place? So should you be protecting yourself and your loved ones? Along with, how are your investments performing? Are they performing like they should, or they certainly were pre-COVID? So if you need any help with any of that stuff, just yell out. We got Daz in the office. There's his contact details. Can certainly answer any questions that you may need in that regard. As we come towards the closure, like I said, give us about 24 to 48 hours. We will upload the presentation. This is where you will be able to upload, the link to do that. And you'll be able to watch again, download all the slides that I've gone through. Previous webinars, so this is a copy of the previous budget update that we did last year, are available for you to watch. We've got, like I said, last year's budget. We've got property webinars that we've done, tax planning and superannuation, and we did hold a small business webinar last month that many of you listened in on. Go there, have a look at them, no problems. Also check out our website. There's plenty of free resources, from brochures to fact sheets to tax checklists to help you gather the appropriate information. We also have occupation guides. So we're coming to tax time again in the coming months. So for example, if you're an electrician or a carpenter or a nurse or a doctor, you can go to our occupation guide section, download the brochure that's applicable for your occupation, and it'll highlight all the different tax deductions that you may have ability to claim upon. So use that. We've got our client portal also on our website where you can upload and store all your tax documents, and it's a little bit safer, or a lot safer certainly, than emailing and different things like that. And follow us on social media, where we'll continue to update you with everything that we need to. What to do next? So like I said, we're coming to the end of everything, but what should you do next? So yes, we have an election coming. Like I said, I've heard that it's either the 14th or 21st of May. Let's wait and see. We also have a state election coming in here in Victoria later this year, the last weekend in November. So it's going to be an interesting 6 months. Usually what happens with elections, they promise everything. They splash money around. Not sure if the governments have got plenty of money to splash around at the moment. That's the biggest problem. So a lot of this stuff that we've just gone through for the last hour, will it get legislated? That's the big question. And what else will they promise? So access any information via our website, download what you need to, talk to us, ask us for assistance if you need it. We're here to help. We're here to advise accordingly. So finally, thank you for coming along. I really appreciate you taking time out during your lunch hour. We'll upload this presentation, like I said, to our website where you'll be able to download the slides, etc. Make sure that all your compliance is up to date. The ATO are watching. Talk to us if you need a hand in that regard. Talk to us around assistance. We've got tax planning season coming up. We will do another webinar in the coming month or two around tax planning and what are some tips before it's tax time that you can get in place. But the key is, what do you need to do to get financially sorted? What do you need to do to get your house in order? And that's what you should be concentrating on. There's our contact details. Feel free to reach out to the team with however we can help. But thank you for jumping in and having a listen, and take care, and we'll catch up with you all soon. Cheers. Bye-bye.